Hey everybody, welcome back to the channel. Palantir has been dropping like crazy over the past couple of days. Went down about 15% after earnings, and then the next day another 10%. It has been pretty bad. CNBC is the world's largest media company when it comes to covering business, and they pretty much transformed the world of business and stocks and finance and investing by launching 24/7 hour coverage of all this stuff in the late 90s, or I believe early 90s, around that time. CNBC launched an entire revolution around how people got information, how companies gave information, because they would go to the biggest distributor, which would be CNBC, to get their messages out there, and also how companies thought of stock prices as a result of different things said on this network, given the exponential reach of this network to the masses. Now, there's a lot of competition for business media and for just media in general for content, but CNBC has always maintained its dominant presence, particularly because they talk about every single stock. And that's one of the downsides about CNBC, is that because they talk about every stock, they're not able to get every single person on their network, the Jim Cramers of the world and the other people, to be knowledgeable on all those stocks, which means they end up saying some crazy things and they end up flip-flopping and contradicting. That's kind of the nature of the media business. But sometimes they really do get some people to come on the network that are able to provide coverage for particular stocks and companies that don't have an immense amount of bias. Yes, they may be holding the stock, but are actually looking at it from a more objective perspective and aren't flip-flopping on the day-to-day because they need to say something to appease their audience because they're on live television 24 hours a day. So we had someone come on CNBC, Roger Monteforte. I've seen this guy before in previous interviews, but I haven't seen him too much on CNBC. And he just had 4 minutes of some analysis on Palantir, why he's been holding it for a while, and ultimately his thoughts after earnings. So let's get into it. It was some good words to say about Palantir, and let's look at his analysis.
It sounds like you think the market's just not sort of getting Palantir, since Palantir is actually exhibiting growth compared to some of its peers, which are completely unprofitable. What exactly aren't they getting? And maybe it's just the market environment. The market environment is not a good one for stocks of this ilk.
Well, yeah, I mean, absolutely. It's an extremely tough tape right now. I mean, the market does not like uncertainty, and you have three very key things that are extremely uncertain. You have the geopolitical situation right now that's extremely uncertain. You have inflation. To what degree will it stay, or will it eventually taper off? And then lastly, you have interest rates and how aggressive the Fed will be. As long as you have those unknowns, I think you're going to have gyrations that you see, that we've been seeing over the past 6 weeks. As the market sort of searches and tries to find its footing. I don't think it's anything uncommon. If you've been invested in the market for the last 20 years, we've seen this time and time again.
So that's the first important thing to understand, right? He says, if you've been invested in the market for the past 20 years, and for us, some of you may be watching have been invested for 20 years. I think a lot of you are probably not invested for 20 years. I've been in for about 2-3 years. There's a big point to understand, right? Geopolitical crises come all the time, to be honest. Now, some of them aren't as intense as what's going on in Russia and Ukraine, but they happen a lot. I mean, that's just the nature of the world. The world is kind of crazy. It's kind of one of the reasons why Palantir is actually necessary. So it's like a lot of geopolitical consequences happen. Inflation is something that always happens, ebbs and flows. Now, inflation is really bad right now. It's not one of those basic things. But we had a lot of years without inflation. So, and the COVID pandemic happened, which was, again, no one expected it, which accelerated a lot more spending that led to inflation. So what he's pointing out is that there's a lot of things happening in the macro economy that shouldn't be seen as like it's the end of the world, because it's investing and it's the world. And investing has to deal with money, and money has to deal with the world. And the world affects money, which means it also affects your investments. So at the end of the day, it's not something, he's setting up the argument by saying, look, yes, the market's not reacting to it, especially because it's a growth stock, but it's not something to be like, oh my goodness, I have to get out of this position, particularly because things happen in the market, and the things that happen end up affecting all stocks.
I think to shift gears to Palantir, when you look at the Q4 in and of itself, I mean, they beat on all key metrics. They beat on revenue. They beat on adjusted operating income, and also adjusted free cash flow. I think that what the market seems to be missing are the key takeaways from the call. I think one of which got literally zero play today, was Karp coming out and mentioning a substantial reduction in the stock-based compensation in 2022. If they cut it to the degree that he mentioned it to on the call today, I mean, this should result in the company becoming profitable on a GAAP basis.
That's the big thing. I talked about this in my Q4 earnings. A lot of people are forgetting that Palantir is operationally profitable, meaning they're making a profit if you take out stock-based compensation. If you put in stock-based compensation, it puts another burden of hundreds of millions of dollars, which makes them negative in terms of GAAP profitability, which are the generally accepted accounting principles. Operationally, without those generally accepted accounting principles, they are profitable already at the tune of almost 30%. So if they get rid of stock-based compensation and they grow just a little bit more, they have a chance to actually make a profit this year, which is phenomenal for a growth company in its second year of being public.
And then secondly, I would say that when you look at Palantir as a whole, it's important to remember that they're only one of a handful of companies growing at 30% and generating free cash flow margins of close to 30%. You'd be hard pressed to find other companies out there with the same type of numbers as Palantir. So, again, to your initial point about growth stocks, look, during corrections, stocks will come down. It's just a force of nature. But it's important to remember that good quality stocks will come back. If you're a company out there that's trading at 100 times sales with no visibility and no profitability, you know what? You won't come back.
This is what I really want to talk about as well. I mean, this happened. This is sort of Kathy's argument about the .com bubble bust not existing right now. Look, his argument is when the market is bad to growth stocks will fall, but the good ones will come back. And that statement is profound. And the reason it's profound, and I mean that literally, it's profound, is because when things fail, it's hard for them to come back. Like when you think about the concept of failure, like, you lose in the NBA finals. It's hard to get back to the NBA finals or the Super Bowl or the World Cup or whatever. Like it's hard to get back to that position because it's really, really difficult. There's a lot of luck involved. There's all this stuff to get to that opportunity to have a chance to hit it out of the park again. But the great ones, the good ones will get back there. Michael Jordan got back to the NBA Finals. LeBron James back to the NBA Finals. Ronaldo, I'm not that big into soccer, but he gets back there. Tom Brady gets back to the Super Bowl. It's like when you're good, you're good. And there's this good thesis I have on life, which is that winners win. And like if you're good, you will experience failure and adversity, but it doesn't mean you're necessarily going to lose. I mean, you're going to have mini losses, but overall at the end, you're going to win because you're going to find a way to figure it out if you've got it in you, if you're good. And I think if you're invested in Palantir, I mean, one of the investment theses are that Palantir is good, that Palantir is great, that Palantir is doing something that various companies can't do, as he said, growing 30% year over year. So if you believe in Palantir and you believe in the growth story of Palantir, then you believe they will be able to come back because they have a high quality product. As he's saying, if you're trading 100 times price to sales, which is insane, and you have no signs of profitability, no growth potential, no like real moat, then you're not going to come back, which has been some of the companies in the .com bubble and maybe some of the companies right now. But something like a Palantir just doesn't necessarily have that issue.
But we don't think Palantir is one of those companies. We think that's a key differentiator here in this situation.
They did beat on a lot of metrics, but they did miss on adjusted EPS. So let's be clear. There's a reason for investors to be upset in terms of them meeting estimates here. Roger, I'm curious because you've been a long-time investor. When we say long-time investor, it predates its IPO. You've been an investor since 2014. And so I'm wondering how being an investor for such a long time influences how you see the company right now. In other words, was your cost basis so low that you're willing to stick with it? I'm just trying to get your perspective.
Yeah, I mean, I think that's part of it. I think when we invest, we look at two key things. We look at, the ability of the company to innovate and then management's ability to execute. And we think that since the company has come public, although they've been in business for 17 years, their ability to innovate and management's ability to execute is just unparalleled in the market. I mean, I think that we are in the infancy stages of what this company can literally do. I mean, we ask ourselves the question that, are corporations and governments around the world going forward going to need less big data analytics software or more to solve tough problems? And we're in the camp that they're going to need Palantir software. And we think it's a game changer going forward. So yes, is my cost basis super low? Absolutely. Did I sell any shares personally since the company has come public? And since I've invested? No, I haven't sold one share personally. So I'm fully committed to the story and what the company is doing.
That's really interesting to think of as well. So this guy has had them since 2014, right? So he's had them since 2014. He's had them pre-IPO, and his cost base is obviously very low. So as a result of having them from 2015 and his cost basis being super low, he could have sold when Palantir got to 45. Right? So when Palantir was at 45, when it was at its all-time high, he would have had a killing. He would have made a lot of money off of it, particularly because he had his cost basis below probably $7 or $8, given he got it in 2014. So A, he was able to reach out to NASDAQ private capital markets in 2014 and be able to get shares. B, he's held on to all those shares since 2014, even when it got to returns that probably looked phenomenal for him. And C, he still feels confident enough in the story and the moat of this idea that more and more companies in the future will need big data analytics platforms to solve their problems. Additionally, he even says that Palantir is at its infancy of what it can do. And, I think these things are important to understand. It's not like, oh, this guy came on CNBC, he talked about it, therefore he's the expert on it. It's just a question to analyze if someone has shares. And this is what happens in investing, right? You have to get perspectives from other people, understand why they're thinking of these things, and really try to dissect the nuance of these things. If you're going to dissect the nuance of Cathie Wood selling, it's also important to dissect the nuance of someone not selling. If you've had shares since 2014, you believe that the growth is actually exponential. It's one of the only companies growing 30% year over year, and it's in its infancy, and management has the ability to execute after being a company over the past 17 years. They've been in business for 17 years. They just went public, and now they're innovating products. I mean, again, deal after deal after deal. I've done a lot of videos on this stuff. How is a 17-year-old company producing all of these different deals and innovations every single week, it seems, where they're coming out with new stuff? It's because it's a pretty phenomenal company that is very special, and the stock price of that company, in my opinion, is not matching the reality of what the company is actually doing, along with the macroeconomy not being in place right now. So Roger A. Monteforte, he's a fund manager at Innovation X LLC. He's been running the Forte Capital Group since 2001, so he's been a manager of that capital group for the past 21 years. And for the past 8 years, he's held onto Palantir, and he has not sold a single share because he believes in the potential. And I would have a good hunch that he might be averaging down even more given the prices that we're getting right now. So yeah, good stuff to see someone come on CNBC and actually talk about their conviction. It's not like he's trying to spread good news or bad news, but rather this is his reality. He's held on to the stock for this long because he believes there's a growth story. And, for someone who has that much conviction, for someone to actually be able to acquire private shares in 2014 means they knew about this company for the past 10 years in a way that a lot of people didn't. And that's just an interesting perspective to get. Let me know your thoughts in the comments. What do you guys think about this guy not selling his shares since 2014? Thank you for watching. I'll see you in the next one.